right, so one of the things I take pride in are doing VA loans because I'm ex-military and I'm passionate about it. And if anybody deserves the best top-notch treatment is our veterans. So my guideline knowledge is top-notch because I've actually changed policies at companies by going to the VA and getting things in writing and making it right. So VA, a lot of times I hear that their debt-to-income ratio is too high. The first thing, if you hear the debt-to-income ratio is too high from a loan officer, then they don't know how to do VA. VAs are not based off of debt-to-income ratio. They're based off of residual income. Residual income consists of hitting them for an estimated amount of maintenance per month on the property based on the square footage, the mortgage payment, and then the debts that are on their credit. And then I also have to calculate how much taxes and Social Security and Medicare is going to come out of the paycheck. It's a weird calculation. I'm not going to sit here and explain to you guys how to do it. But then you take their total income after you subtract out all those debts and the estimated maintenance, and you're left over with what they call residual income, meaning what they have in their pocket. I personally believe residual income is way more accurate because VA loans have the lowest foreclosure percentage on those, believe it or not. And that's not just because all of us vets pay our bills, believe me. Not all of us vets do. I was even irresponsible when I was younger too, okay? But the residual income is how you figure out if a veteran qualifies. I have gotten people qualified that had like a 76% debt ratio before when they met the residual income. I don't want to break it down to you, it's too much, but the fact of the matter is it's based on residual. So if you have a loan officer saying that your client can't qualify due to their debt to income ratio, that's because VA loans are the most misunderstood and they are being mistold by their lenders, which happens all the time because they don't understand VA, okay? And let's go through a few other things with VA. VA, you can go down to a 550 credit score. You can actually get somebody approved with no credit score, which is different. If you have a 550, we're fine, right? 550 or above, I could potentially qualify them. If you're below a 550, then that's an issue. But if you don't have a credit score, which is completely different, I can do a manual underwrite on that and get it qualified. Now, talking about debts on VA, I want to get a little bit specific here. If you have a husband and wife, and let's say the wife is the veteran and she's on the loan, and let's say there's a card payment that is on, they have 2 card payments on their credit, and the husband actually works, but let's say his credit sucks, so we're not putting him on the loan, we're just doing it in the wife's name. Well, hear from another lender, they're saying their debt ratio is too high or their residual income is too little, if they actually know what they're doing. Well, the fact is you can use the husband's income, even if he's not on the loan, to offset debts. So if he makes enough income to offset some debts that we state are his, like a car payment and some credit cards and whatnot, I can actually exclude those from the residual and the debt to income ratio and actually qualify the client. Most lenders don't know that out there. The other thing is too, any debt that husband had prior to them getting married, I can actually exclude that from the debt to income ratio, except for credit cards. Credit cards can be charged up after you get married, so they want to allow for that. Some lenders require an attorney's letter or something stupid like that, but Arizona's community property state, that's a law. We don't require that. We know the VA doesn't request that either, so we're fine there. So in short, VA loans are 100% financing. You can work with lower credit scores. The guidelines are open up to interpretation. They're not just yes or no most of the time. So when you have a good underwriter, a VA underwriter like I have in my branch, that we have learned how to work together and be very cohesive, we get a lot more things done. But the problem is most lenders don't allow for that, to have your own underwriter in your branch or build that relationship with the underwriter. We have done that and we understand each other and speak the same language. So basically you've got flexibility of guidelines to be 100% financing, low credit scores, and much easier ability to qualify. So if you're a veteran or you're a real estate agent out there having a hard time getting a veteran qualified, call me, get a second opinion. I'm not salesy. I'm just going to sit here and talk to your clients. I'm going to inform them. And if we can't do it now, I'm going to give them a game plan. Thanks again.